La, 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 la. Oh, hey. Hi there. Zach McReynolds here from the Cherrie and Zach team at Next Home Real Estate Rockstars, Valencia, California. So a couple things we wanted to kind of talk about today. From the buyer perspective, we've been having some good success lately. Look, it's a very competitive market. There are not a lot of houses on the market. It is low inventory. There is a high buyer demand due to the amazing interest rates that are in the market. So obviously that's creating a competitive market for a buyer. You're writing offers. You're often up against other offers, and we've had some good success lately writing offers for buyers where we're getting our offers accepted and we're not actually the highest price. But in order to write an offer that would be considered over a higher offer, there are some things that we need to do to write a strong offer. And I've got another video on that we've put out. You can go look that up wherever you're finding this. That one probably exists nearby. But I wanted to kind of pull one thing out of that, and that's shortening contingency periods is a big part of how we're getting these offers accepted and showing strength. Look at it from a seller's perspective. Why would they take an offer that isn't the highest price? So in order to get that offer accepted, if we're not giving them money, what are we giving them? And what a good sign of strength is lowering your contingencies, shortening those time periods, right? So as a buyer, you have three major contingencies that protect you, the buyer, that kind of allow you to be able to back out of the transaction while not jeopardizing your deposit money. The first one is a home inspection. So that's been something that people have been, technically boilerplate would be a 17-day home inspection period. So we've been seeing for a while now, even before everything going on and all this craziness in the market, shortening that time frame from 17 to say 7 or 10. And that's saying I'm going to get the home inspection done quickly, because that's usually one of the bigger hiccups in a transaction that can kind of put the brakes on or a buyer backing out of escrow because they found something in the home inspection that makes them uncomfortable, or they found something in the home inspection that they'd like the seller to address or fix, and the seller's not willing to address that because it is a negotiation. So by shortening that time period, saying we're going to get past that one thing that could be a speed bump or a roadblock fairly quickly. Well, then your other two major contingencies are your appraisal contingency, which is typically a standard 17-day as well, and then a loan contingency, which is now standard in California at 21 days, although a few years ago it was 17. But the problem was a lot of lenders were having a hard time giving you final loan approval in that 17-day window, so they pushed it to 21. So what I want to talk about today is being able to shorten those other two contingencies, not just writing an offer and shortening your home inspection contingency to 7 or 10, but can we shorten our appraisal and loan contingencies as well? And what does that entail? And all of this, these two major things, this is why having a good lender is so important. It's really one of the biggest parts of the transaction for you as a buyer, having a good lender. Most of the heavy lifting falls on the lender's shoulders during the transaction. So being able to shorten these contingencies comes down to who's that lender and their capabilities of getting the job done. So let us start here. So the first thing that, in order to be able to do this, is you got to have a good lender. The lender's got to be on it in order for this to happen. It's one thing for a lender to shorten the contingencies and say that they can, but that's bad news if they can't actually meet those timelines. Let's say you reduce that contingency period, your loan contingency, from 21 to 14 or even shorter. A good lender right now could actually close in 17 days. So you might be able to remove that loan contingency in 10 or 12 days. Well, a lender saying it and not actually being able to perform can cost you, the buyer, the home, because if you don't remove that contingency on the day that you agreed upon, the seller can issue what's called the notice to perform. And basically you'd have 48 hours to then remove it. If you don't remove it by then, they can kick you out of escrow. You could lose, obviously, your deposit money may not be in full jeopardy, although you might have a seller that goes after you for it. But if you spent money on appraisal, on inspections, you could be out $1,000, if not thousands of dollars, only to be kicked out of the escrow, lose the home. I mean, if that's your dream home, obviously losing $1,500 maybe isn't the worst thing, but losing the home would be the worst thing. So having a lender that can actually do what they say and not just give lip service to the agent, because if you're promising something and you can't deliver, obviously that wouldn't be good. And what constitutes a good lender sometimes is how good and strong is their support staff, and is it in-house? That's a big part of this. Is your lender able to perform that, and do they have the team involved to actually be able to remove those contingencies in those faster timelines? Number two, the lender being a direct lender versus being a broker. A broker basically is just a middleman. They don't have that in-house team. They're just brokering that deal out to some other mortgage company, and they're not really doing the work. So they have no control of these timelines whatsoever. So they could, again, people will say things because they just, if that's what it takes to get our offer accepted, then let's just say we'll do it in 14, but they actually don't have any intention or knowingly know that they cannot perform in those 14 days. Again, could cost you money, could cost you the home, and it's funny because a lot of sellers, when they're selling a home, they'll interview multiple realtors to find the best person for the job, to make sure that they're selling for the most amount of money in the quickest amount of time. A lot of buyers don't always interview multiple agents. We highly recommend that. I've actually got a nice PDF that's like all the questions that you should ask a realtor when you're interviewing them, but you should interview multiple lenders as well. It's not just about getting the best rate. If again they can't meet these timelines, I mean, we've seen horrible scenarios where some of these big banks weren't able to even remove loan contingency within 30 days, and you're jeopardizing again the home and money by hiring the wrong lender. So much of this falls on a capable lender. And this is a big part of it too. Number three is being fully approved and not just being pre-qualified. So what does that mean? It means that you've given all of your paperwork, your income documents, your all your down payment documents, where the money's coming from. Everything's been done up front in a full pre-approval. So essentially going in, and they call this underwriter approval. You have full approval from the underwriter, meaning your file's gone all the way through the system. They know that you are fully approved. They have everything to make sure and to approve you up front. And really, it's just a formality of they need the address for the house that you want to buy. So it's just plugging you into that address is the final formality, but technically you're fully approved for a loan. And that's how they're able to then give you full loan approval within that 10-day shortened time period versus a traditional 21. So, a lot of times I think people are talking to lenders and they don't want to give them all their information, but you really should. In fact, when you're writing the offer, having that pre-approval letter versus a pre-qual, like let's say I put a house on the market and we get 4 or 5 offers. It's actually happened to me pretty recently. I got an approval letter over from an agent that wrote an offer on it. And on that pre-approval, it basically says on there, it says, this person is, approved up to X amount of dollars. But to verify, we need their income documents, their down payment. Basically, they're saying they haven't proved or provided anything to make sure that they actually qualified. It's basically they just went off a verbal on the phone. So it's like me calling and going, hey, I make $1 million a month. What do I approve for? Oh, you qualify for a $4 billion house. It doesn't mean anything because they didn't verify any of the information. So verifying that information is such an important part of it. Being fully approved, having approval from the underwriter is a big part of that. Number 4, having a time is of the essence mentality. The second you get your offer accepted, if you're trying to make shortened timelines, if you're trying to close fast or remove these contingencies in an expedited manner, you've got to be ready to sign stuff and move. The lender right off the bat has to basically order that appraisal, and they got to disclose the loan. There's a bunch of things that they got to do, and getting those papers signed up front in an expedited manner really moves the process along. So, I mean, if you're sitting on something in your DocuSign for 48 hours, you don't sign, well, that could literally cost you 48 hours delay, especially again if you're trying to meet these heightened timelines. And then number 5, being aware that an HOA, or if you're not putting 20% down, then you've got mortgage insurance, or MI, or often known as PMI. Both of those processes can take some extra time too. So same thing, getting on the HOA company to expedite those HOA docs so they're reviewed in a timely manner to be able to remove all of your contingencies by day 12 if that's what you committed to. And then same thing with the MI. It's just being aware of the situation and moving as fast as possible so you are not causing a delay on your end that could ultimately have you kicked out of escrow, lose the house, lose some money that you spent on appraisal, inspections, etc. Again, Zach McReynolds with Next Home Real Estate Rockstars. If anybody ever had any questions about anything real estate related, if you're interested in seeing that document here, I'm going to share this actually, about the questions that you should ask. One second.